Welcome to another edition of the Economy Discourse. I'm Tope Babalola. Today we're looking at recent developments around Central Bank of Nigeria, monetary policy, and our economy. We meet to discuss these issues is Tope Babalola of our Proshare research team. Tope, great to have you.
Thank you for having me, Otto. It's a pleasure once again.
And so let's kickstart with the recent initiatives of the differentiated cash reserve ratio and also the corporate bond. These two initiatives, can you share with me how this is going to stimulate economic growth for which the Central Bank of Nigeria has been discussing over the months?
Yeah, just like you had earlier said, the central bank had, in several times, I've always emphasized that our cash deepening ratio had really been very narrow. So therefore, the differentiated cash reserve ratio, which they came up with, and the corporate bond actually is just another attempt to actually deepen the credit, to ensure that you deepen credit debt. But more importantly, it's that it is actually aimed at what many will refer to as the green fields and the brown fields. When we say the green fields are actually just new investments, whereby brown fields are already existing investments. But the idea of it itself is to also create new capital, because it will not refinance. What they will do is that it will not be refinancing already existing debt. And for instance, individuals or persons who have non-performing loans will not be able to tap into such finance, which is also very good. But then, at the same time, is that it also shows that the central bank, with the corporate bond, is also trying to stimulate what many people refer to in terms of supply following finance. Supply following finance, which is very good, because what they're trying to say, what they're also saying is that you can also allow the public also to tap into such corporate bonds, which is good, because if you remember, one thing with our money market is that it's completely a very captive money market, which is dominated by the fiscal authorities. So with that, it also allows the central bank, like you said, to stimulate both growth and also reduce the level of unemployment, which is very key for our economy, very, very key.
Is this a shift in terms of monetary policy for Nigeria?
It's not a complete shift. Indirectly, it's that what they are trying to do is that they're moving around with the CRR. And what you are doing with your CRR is that you are tweaking your CRR, but you are shifting from a more somebody will refer to as an inflation targeting position to a more eclectic position, whereby you are also trying to accommodate both growth and also ensure that you look at unemployment. But you know very well that your cash reserve ratio, on the other hand, it's tied to your base money. So what you are doing is that you are trying to create more capital with cash reserve ratios. Because what you are doing is that by reducing your cash reserve ratios with your DCRR, it also allows banks to give fresh capital, especially to businessmen. And that's also very, very important, especially in an economy whereby unemployment has been at record high and your credit deepening ratio is relatively very deep, very narrow. So those are what is. So it's a gradual shift to the middle, really, to a more eclectic policy.
Now let's look at developments in the sectors that they highlighted, particularly the fact that the last economic GDP report showed a slow growth in sectors like agriculture and manufacturing. The objectives we looked at, will it really achieve unbundling these sectors and unlocking growth as expected?
Well, there are two things. One is that you must also take into consideration is that it's the first part is that you still have the structural factors, which one way or the other are still
structural economic.
Structural factors, which one way or the other are still largely symmetric risk, which will also affect how you can access some of these credits, which is we can't take that away, because the truth is that credit quality is also very important. Very, very important. Then secondly is that you also have to take into consideration that in creating some of these credits, the banks also have to look at how they rotate their assets over time. Those are very, very important. And lastly is that if you look at the target, is that it's actually aimed at trying to improve local content, which is important, and they are trying to also look at inward-looking policies, which
like
is
backward integration.
yeah, like backward integration, you know, supply side.
Substitution.
Yeah, import substitution, you know, just trying to improve supply side economics. And at the same time, more importantly, is that also sectors that will drive in, will also ensure diversification in terms of export revenue. You know, that is also very good because for in foreign revenue, that's also very, very important. So that is the main target of that. But then the reality is that it always have these structural factors that are always going to be an headwind to it.
Now let's look at developments in the frontier economy. I know that Nigeria is a frontier economy, particularly in the emerging economy space. 50% of our planned borrowing is external. How does this play out? And of course, other economies around our circle.
The emerging economy space, if you look at what has occurred in August, you look at countries like Turkey, you look at countries like Argentina, countries like Indonesia, countries like South Africa, you find out that they've been a complete deterioration, especially in their currency. And largely, and that also has also caused a surge in terms of yields on their bonds. For instance, you look at Turkey, for instance, Turkey, the Turkey US issue, you realize that the yield on their bonds actually have increased by almost 100%. You know, that's the lira currency. And you look at Argentina. So for emerging economies, you are seeing that this consistent hikes in Fed funds has also led to what? Has also led to an increase in yields on their yields, and also one way or the other has also increased the level of interest premiums. That's one thing you also have to take into consideration. Now, for Nigeria, if we obviously, just like you said, we'll be going to the external market, and you know largely why that policy was to short cycle the domestic market and avoid this crowding out effect. But when we go to the external market, one thing is certain is that the yields yields will have to increase, because what you are seeing over the markets, especially the emerging markets, the frontier market, is that you are seeing this cross-systematic risk, which is spreading across sides. So there's no how, one way or the other, the cost of borrowing really also will increase.
Yeah. And let's look finally at Argentina's experience. Argentina has had to meet some conditions for $50 billion credit from the International Monetary Fund. And just over the weekend, President Mauricio Macri had to review the grain tax policy. How does this play, and what are the lessons economies like Nigeria can learn from this?
Well, Argentina experience, I think what you are seeing in Argentina is there are two things. Apart from just the grain tax, is that we're also not looking at the structural composition of Argentina. One is that Argentina as a country, it has a negative current account. Secondly, is that Argentina has substantial high levels of inflation inertia. So you take these two dynamics, one way or the other, also plays against it. So when you are seeing this, those are the things that have also dampened investors' confidence. Therefore, coming to your issue of the green tax, I think the green tax, what it's trying to do is trying to shore fiscal revenue, because one thing many investors have been concerned about is that the revenue in Argentina, really, in terms of internal generated revenue, have really been lean. Yeah. Because you know he had also tried to follow this gradualistic approach. And many had always argued that he should follow a big bang approach. But then with this recent green tax approach, it's just a way of buffering up investors' confidence, and also strengthening income, fiscal revenue.
Thank you very much for this incisive discourse we had today. I'm looking forward to more of this from you, Tope Babalola. Thank you. And that will be all for this edition of the Proshare WebTV Economy Discourse. You can log on to our website, www.proshareng.com, to watch our videos, read our reports and analysis. Till next edition, I'm your uncle, Tope Babalola. Do have a lovely day.